GBPCAD, let's break it down. Start off on the daily time frame. You'll be looking for an impulse, breaking structure and closing below the lowest point. As you can see, we have our impulse right here, breaking and closing below the lowest point of the previous structure. So I will be drawing out the structures to give you an indication of what the previous structure was like. Here we were making higher lows and higher high, so price was bullish on the daily time frame. Then we had a break of structure with this impulse closing below the lowest point of the previous structure. After our impulse, you can see we had a 2 daily retracement candle of the same color. So right now, this is a valid setup for us. We will be going to the weekly time frame. On the weekly time frame, we will be looking for support or resistance that could be of influence. So right here, as you can see, price came to this resistance area and found rejection. These were the previous rejections, so we have the rejection right here, and price came back up to this area, got rejected to the downside, came back up almost touching it, got rejected, and came back once again. And you can see this rejection caused a change of structure on the daily time frame. So that will be our area of influence on the weekly time frame. Going back to the daily, we will be drawing our Fibonacci in the opposite direction of the retracement. This is because we're going to measure the distance of the new impulse. So let's draw our Fibonacci in the opposite direction of the correction. We go to the 4-hour time frame. On the 4-hour, we will be looking for price to break this 61 level, followed by retracement that will get us in the trade, and we can ride it all the way down to TP. Our stop loss, as always, will be at the 88, or in some case, as you will see, it will be above the structure, and the structure in this case is above the 100. So right now we're just chilling and we're waiting for price to break the 61. As you can see, price went a little bit higher. You can just adjust your Fibonacci to the highest point and the lowest point. Now you see that price has broken the 61 level. So we will put our sell limit on the 61, wait for price to tap us in, and then we ride it all the way to the negative 27. So let's put our sell order on the 61. EP will be the negative 27, and our stop loss, normally we will put our stop loss at the 88, but as you can see, there is no structure for us to put our stop loss at the 88. That means it won't be protected, so that means we have to put it above the structure right here, above the 100. So I will give you an example of what I mean. Say price was bullish, creating higher highs, higher lows, higher highs, and then price shift structure, creating lower lows and lower highs. So right now we are looking to get in at this point right here, this lower high that was created. That means we have to put our stop loss at a protected level. This now becomes the protected level, because to continue the trend downwards, that will mean that price won't break above this level right here. Because if price breaks above and close above, that will mean it is a shift in trend, and then we're going back bullish. So now we're looking for price to go back down, continue downwards, a bearish trend. That means our stop loss goes to the protected area, that it will likely be not broken. So let's go back to our trade. As you can see, this is not a 1 to 3. Normally, we will always go for 1 to 3. So what you can do is you can put your entry just slightly above the 61 to create a 1 to 3 risk to reward. But sometimes you will see that price doesn't come all the way back here. It will just tap the 61 level and then drop and melt to your TP. So in this case, you have to make your own decision if you want to put price at the 61 and be okay with a less risk to reward, or you always go for the 1 to 3 and you put your stop loss just above the 61 level to create the 1 to 3 risk to reward. In this case, I didn't put my stop loss above the 61 to create the 1 to 3. So I just went safe and I put it on the 61 level because I knew price would more than likely retest the 61 and then drop. So let's play price out. As you can see, price tapped us in and we have now entered the trade. We did have a mean pullback. You can see this one almost coming back to our protected stop loss right here. This is what I mean when I say you have to know when to put it on the 88 and you have to know when to put it above this structure area right here. So that was the reason I put my stop loss above this structure area and not on the 88, because there was no protected structure for me to put my stop loss right there. Now we just chill and we wait until price breaks this 38 level. When price breaks the 38 and close below, this is an indication that we can now move our stop loss to break even. And it now becomes a risk-free trade and we can just ride it out all the way to TP. So right now the trade is risk-free. Let's fast forward. As you can see, TP has been hit. This was, in my case, not a 1 to 3, but a 1 to 2.26, which I am more than okay with. If you had put your stop loss above the 61 to create a 1 to 3, you would have been tapped in and you would have your 1 to 3 risk to reward. So this is the breakdown on GBPCAD. I hope y'all enjoyed the breakdown. In the future, there will be more breakdowns, so be on the lookout. Appreciate y'all for watching. Peace.